A little bit of a manic Monday, Black Monday feel to it as Japanese markets have their worst 3-day stretch ever. Carry trade unwinding, volatilities in markets, chaos in the streets, Matt. We're going to break it all down. Mark and Matt tackle trading and tackle day. Matt, you are a currency expert. Talk to us about the carry trade, the impact it's having on the markets.
Well, and that's the major news that is happening over the weekend. That's the only thing anybody's talking about on over the weekend, because this is a major situation that is occurring over there with the Bank of Japan. They raised rates last week. We're seeing the follow through that raising of rates. And when the Japanese raises rates, I talked about it in the newsletter, talked about it in Discord, we talked about it in the Traders Lounge. We're going to talk about it all this week as well. But when the Japanese do raise rates, it typically creates a little bit of panic in the market. And when you're talking about in the last 4 years being the US dollar, the euro, the Australian dollar, the New Zealand dollar, pick your currency out there. Well, it was used as the cross between the Japanese yen when it came to the carry trade, because the Japanese yen maintained historically low interest rates, whereas every single country, especially major central banks around the world over the last few years, have been normalizing interest rates, raising interest rates, and the Japanese have not. Well, the Japanese, while everybody is now in the process of starting or executing the lowering of interest rates, the Japanese decided last week to raise interest rates, and that put a tremendous amount of pressure on the US dollar versus the Japanese yen. As you can see, the dollar is just in a free fall situation against the Japanese yen from a trending perspective. But what it really has done from a volatility the last 4 trading sessions is just create a tremendous amount of volatility as the carry trade is being unwound within the Asian markets and quite frankly around the world right now. And that is what we are seeing here today. We are seeing that massive unwinding of the biggest trade in the world. When people talk about equity, commodities, currencies, the currency market is a massively bigger market than all the other markets combined. The currency market trades well over $6 trillion every single day. We see massive movement in the currency market. And when these types of situations happen, there's not a market that's not going to be not hit from that volatility. And so equity obviously is going to be impacted in the short term. Commodity is going to be impacted in the short term as that trade unwinds. And so the question is, have we seen the conclusion of that trade unwinding? And I don't think we have, Mark. It doesn't mean we're going to see continue selling in the equity market. We may have seen a bottom already. We don't know. We're going to have to navigate that from a pure technical perspective. But there are trillions of dollars in carry trades out there, and it takes time to unwind it completely. But that is what we are seeing here today. And that's quite frankly what we saw last night with the Japanese markets down over 12% on the open to the close, just absolutely just slaughtered in the Japanese markets. We're seeing that continue throughout the European markets. We're seeing that continue throughout the US markets. But again, are we seeing the beginning of something? Or are we seeing a little bit of the conclusion of something? That is the open question, quite frankly, and that's what we're going to have to navigate from a technical perspective. But the news is we are unwinding the carry trade, and the carry trade, think about it like this, Mark. The carry trade is picking up pennies in front of a freight train. And they can do that for as long as the Japanese never does a thing. And the Japanese never does a thing most of the time. I think since 1989, the Japanese have raised interest rates or attempted to raise interest rates 3 different times. One was in the early 2000s, one was in 1989, and now we're seeing it today. And every single time we've seen massive volatility create throughout the system. But again, are we seeing the reflection of the unwinding of the carry trade, or are we seeing something about the beginning of something worse out there? That question we will not have an answer to until we start to see the technical conditions start to slow down here.
Yeah, no, and you know, nobody wants to hear on a day like today, Matt, opportunity is coming, but that's how these events play out over time.
whenever there is chaos, there's opportunity.
I mean, chaos always leads to opportunity. You go look at any chaotic incident over the last, I don't know, maybe 1929, but outside of that, they always have. They always have. And so we're going to be astute watching those technical patterns, but it's going to take a minute for technical patterns to develop. This is still a not catch a falling knife environment while we wait for those patterns to develop in the coming weeks, isn't it?
Yeah, it definitely is, Mark. There's no doubt about that. You know, it's when you're looking at the massive selling to the downside, you look at it from you obviously think about it first from a fundamental perspective. You think about it from a behavioral perspective, and you just get, quite frankly, you're in awe at some of the price movements we're seeing over the last couple trading sessions, obviously to the downside. But you're never in the mode of catching that falling knife. We always want to let that knife hit the ground, and we want to let it go through short-term reversal type situations. And so from a technical perspective, obviously the volatility is something to behold. It's obviously very, very concerning out there, but you got to let that play out. The dam just broke. You don't want to fight that type of current. You want to let it subside first, and then you want to see where the damage is, because when you see volatility spikes like this and they violate support levels, it gets crazy in the short term, very crazy in the short term. And you're going to hear a lot of things. You're going to see a lot of things. The truth is going to lie somewhere in the middle, but you're not going to be able to see that until the volatility subsides. And so for me, yes, I don't believe we're starting something very big. I think we're seeing the unwinding of the carry trade, Mark, but that's an open question. That's a probability factor. We have not seen that yet. You got to see it first, and how we see it is we see it through slowing momentum of candles. We see it through pattern development at key support levels. We don't look to, buy the proverbial dip, but we let it slow down. We let it give us those double bottom type fills, and we let the volatility play out. In my estimation, and you're right, nobody wants to hear the opportunity side of today's equation, but that's where my mind gets really, really quickly, Mark, in terms of, yeah, it's not fun to go through this. It's obviously nerve-wracking to go through this. And for people that have been for people who've never been through this, it is very, very, very scary at times. And I totally understand that. But Mark, we have seen volatility spikes before. Let's allow support to build, and then let's get into the mode of finding great stocks that we want to add to a long-term perspective. And so I just kind of feel like let's let the volatility play out, and then let's see where the opportunities reside.
Yeah, absolutely. Well said. Let's go look at a couple of individual mega cap names that have specific news surrounding them. Now, we're going to see volatility everywhere, but there was some news on Apple over the weekend with Warren Buffett. And this is like on another day, this would have gotten a lot more headlines, but Warren Buffett dumped 50% of his Apple shares, right? 50% of his Apple shares. I'm sure that contributed to the size of the gap down, right? Apple was going to gap down no matter what, right? That probably contributed to the size. What do you make out of this chart right now?
Solely based on Buffett selling Apple, I was expecting a gap down in the market to come over through the weekend. That was without the carry trade. I felt Buffett selling Apple was a significant event from an equity perspective. On Apple itself, what we saw out of Buffett and what we saw out of Berkshire's earnings is they had really good earnings, Mark. Berkshire reported earnings over the weekend, released their raw numbers this morning. Berkshire came in at 538 versus the 483 level. That's a pretty decent beat on the EPS side. Revenue came in at 93.65 billion. That's a good number on the revenue side. But the issue for Burke was not necessarily Burke itself. It's all about what Buffett is doing with Apple, and what does that mean for the equity market as in general. Is Buffett selling Apple because he simply had, got oversized in the position relative to the percentage against his portfolio? We know Apple started getting close to like 50% of his equity position, and so he could be alleviating that. He also could be very concerned about the economy and the labor and the Fed overshooting on that side of the equation. We obviously are going through that debate as market participants right now. So he could have been concerned about that. And he simply could be looking at other equity positions out there that he may want to take advantage of as well. We don't know what Buffett was thinking when he did start unloading Apple. What we do know is he dumped about half of his shares of Apple, and Apple certainly gapped down. But much like everything else there, Mark, the NASDAQ gap down, started recovering. Apple gap down, started recovering. And so to me, does this change Apple? Obviously, it changes a little bit in the short term, but Mark, Apple had one of the better reports out of the Mag 7 during the earnings season. They also have the super cycle from an iPhone starting to cook up for the holidays sell season coming in September, October, obviously November going into the December holiday sale season. And so Apple, to me, obviously, it certainly does change the dynamic a little bit, but in general, and any bullish pattern I see here coming from the low point, I'm gonna like Apple.
Yeah, a little bit of news on Nvidia as well. Just gives us a chance to look at it. Reports out that they one of their artificial intelligence chips they're delaying. Here we are in a bear market, Matt, in Nvidia. This smells like pattern watch if I ever have seen one.
Nvidia will also easily get caught up in the unwinding of the Asian markets with the carry trade as well. And so because they are used as a proxy in the carry trade to some extent. But yeah, I saw the news as well, Mark, on them delaying some of their chips, and that was obviously in the news a little bit last week as well. It'll be interesting to see what happens with Nvidia. I don't question Nvidia long term, but certainly I'm always going to question any company. I don't care what my personal like of the company is. If you double top and you give up support and you violate support and you have no pattern development from a bull side of the equation, we're not going to pick up the falling knife. It's just not going to happen. But should Nvidia, in my estimation, also be on that target watch list to take advantage of this type of selling? Yes, I don't think Nvidia is going anywhere long term.
Yeah, absolutely. Let's go look at gold while we wrap up and talk about the economic data that came in today. One of the things, so we have the unwinding of the carry trade going on, but let's not forget at the end of the week, it was all about the coming recession and economic data and things were the Fed's behind the curve, right? We have that story going on as well. Well, we had services PMI numbers come in today, Matt. They actually beat expectations. They were in contraction territory last time, pretty significant jump up. And these are the type of economic data points, Matt, when they start piling up, if they start piling up, all of a sudden people that were talking about recession start talking about something else really quick, don't they?
Yeah, they move on. It's amazing how quickly we move on in this version of our world. The end of the world scenarios could be happening yesterday, but once those data point changes, we're just like, okay, moving on to the next one, moving on to the next one, moving on to the next one. And that's obviously a little bit of what the services PMI numbers did here today. But I also think today's economic data, nobody truly cares about in any capacity. I think today's really all about two things. I think it's about the unwinding of the carry trade, and I think it's about Buffett.
Yeah, no, absolutely. Matt, any last thoughts as we wrap up our tackle today?
No, honestly, tough market day here today. Volatility spikes are never fun to go through ever, but they do happen. We just haven't had one of these volatility spikes recently, and the pattern that we were looking at in April as a pattern, there's a little bit difference here this time, as we are obviously going through a little bit of a different volatility situation with the carry trade. But the simple reality is we will most likely see this unwind. We'll see support at some point start building, and the market's going to start wanting to gobble up some of these areas of the market that are alleviating a little bit of the valuation concern. Because just 3-4 weeks ago, Mark, the market was a little bit concerned with the valuation. Well, here's my last thought. Mark, what happens to valuation when earnings go up and price goes down?
Well, the PE, right? P goes down, price, But the E component of that goes up, which means you can have some radical, what look like overvalued or a little pricey, look very reasonable really, really quick when those two factors come into play.
Which means we should have an alleviation of the valuation conversation that has been a fundamental concern for the marketplace. And so we're certainly alleviating a little bit of that. We're also alleviating a little bit of the inflationary pressure with this type of downward movement in price. And so what happens next is going to be really, really important. I think most technicians that I know expect a rally here. Most technicians that I know expect to rip your face off type rally here. What I'm going to suggest is let's be constructive against the technical patterns and not be degenerate gamblers out there in the marketplace, but let's make decisions based on data. And that's my final thought as we go in to a very important week here this week in the marketplace. Obviously, we're starting off with volatility pockets, but at Tackle Trading every single day during the Traders Lounge, we're going to spend a good hour and a half, 2 hours this week dialing in all of those conversations, talking about the market, breaking down the intraday analysis, but most importantly, staying overtime during the Traders Lounge to answer your questions, look at your charts, and help you with the things that you need help with. That's the beauty of a community. That's the beauty of navigating the financial world together, is because compounding acts with money the same way it does with knowledge. You can compound each and everybody's time and knowledge in a community. And we're going to do that today in our Traders Lounge. We're going to spend time answering your questions, looking at your charts, your trades, and even in the craziest moments of time in the market, we're going to be there with you every step of the way, because that is what we do at Tackle Trading. So come over here, give us a nice little test out, try out that pro membership trial, and come hang out with us in the Traders Lounge every single day and get the help you need to navigate this financial market together.
Yeah. Have a wonderful day, everyone.